So I have Nicholas Gibbs here tonight as we all contemplate how the mystery is going to unfold in this next chapter of the President Trump tariff story. I wish I could have kept that in. If I'd written it down, I could have kept the whole thing in my mystery voice the whole time. So So I think this is absolutely as much fun as I've had in a long time. I already liked it, before we had some kind of a negative, because, in any kind of narrative, you've got to have the peaks, and then you got to have the valley, so that you have something to build from. I mean, holy mackerel. Yeah. What do you think?
I don't know where to start. Well, why don't we start here? Futures are very red.
Very right.
Nasdaq, a future. So the futures just opened like an hour ago, right?
Right. Right.
Um, Nasdaq's down 1.15%. S&P down 1.1%. We're also down 1.26%. VIX is up 3.25.
Where is it?
I mean,
What's it at?
VIX.
Yeah. 40 something?
Uh,
50
let me
something?
pull it up. Fi- Over 50. Yeah,
Over 50. Okay. Okay.
yeah.
Yeah.
So it is not, as of right now. I mean, there's a long time between now and the morning,
Right.
but it's not pretty. And tariffs go into place at midnight, and we're, I mean, look, the market closed not in a good way.
Right, right. Yeah,
So,
so right now, the S&P, I'm just going to use the S&P because that's what everybody turns to as kind of the middle, because the Dow is not down as much and Nasdaq is down more. So the S&P is right, like hanging out right around 20% down, right about bear territory. Has not really broken below. Obviously went way up over that. Looked like it might retrace half of last week's losses. And then it turned around. I think that was when Trump said that he was going to put the 105% tariffs on China, is probably when the market turned and went the other way. So far, it's looking like the market is saying we're not, if it gets down into that 20% range, the buyers are going to come in, thinking that that's maybe the bottom.
um,
It's twice now.
uh, I don't think I agree with that.
Okay.
Um, yeah, I mean, just I'm looking at, yeah, these futures just keep dropping. Um, n- Look, there's nothing that's going to, it's there's no bottom here. Like there's no bottom without clarity because people are getting spooked,
Mhm.
and what's happening is essentially a contagion effect. I mean, like I hear what you're saying. I get the optimism of it, but there's nothing like this is complete herd mentality right now,
Mhm. Mhm.
and everybody right now thinks unless there's an announcement, something to give. I mean, you saw what happened. There was a leak the other day, right,
Mhm.
or a false reporting about a potential 30-day pause on tariffs, whatever, and you saw that immediate recovery.
Yes.
That is how wound up people are. The same way that went up, if people, those are people sitting there waiting, anticipating. The more and more this drags on, the more and more people are gonna be like, "Oh, it's not coming.
All right.
It's not coming." And
So the opposite side of that would be that people already have their greatest fear right now is that somehow China and the US will continue to be at each other's, that she won't come to the table, that they won't have a deal. But as somebody pointed out today, your other six major traders represent 70% of the trade deficit. 70% of the trade deficit. China only represents 2% of our imports. So it's not like
that's not accurate.
Is it 4? It's not more than
No,
that. I just looked it up.
yes, China to US, sure.
Right.
What everybody's missing is everything that China will land in Vietnam for a second and then bring it to the US to have a tariff loophole. Let's drop something off in Australia and then go to California. Like there's so much of that China does,
Okay, but will
and
that
that's all.
stop? Will that end?
Well, my point is if you have these tariffs across everything,
Uh,
it's not just 4%. It's much bigger than that. It's not just 2%. It's much bigger than that. How much, I don't know. But that's one of the main things that was the reason why Antarctica, Madagascar got a 10% tariff, was to try to close those loopholes.
I see.
So my point is, how many things do you have around you that wasn't made in China? Let's just be like, I'm with you. Like I'm supportive of what we're doing overall,
Mhm.
but I'm just trying to be honest here. It's the big fear is that we're a lot more reliant on China than what people think. In my opinion,
Right.
COVID, post COVID was a good start to us decoupling
Uh-huh.
to make sure that we weren't limited or we weren't restricted by them. But I think that kind of started to ease off, and there's still a big dependence on China. And just because we don't see the direct imports from China to the United States, that doesn't mean that they're not doing other things. I mean, it happens all the time where they will land something in Vietnam, land something in Korea or Japan just to come to the United States.
Or even legitimately, they're sending a part to one of these countries, and that's part of what's going to be then assembled and sent to us. Yeah, but my point is that is not going to be. In other words, if they send something to Vietnam, Vietnam's not going to tariff it. And then I guess, Vietnam is if this part that is not reasonable and fair, if Vietnam is now sending that to the United States as something made in Vietnam, that's not going to change. So it's still going to
Well,
be the Vietnam tariff, not the China tariff, and China's still going to ship that to Vietnam.
well, if you heard some of the conversation that happened this morning with, I think Besant on CNBC, I think it was Besant on CNBC. I've been watching these all day, but
Yeah.
that is part of the negotiation that they want. Is
Okay.
they want to tell Vietnam and then put the onus on them, saying you can't just allow this to happen.
Okay. Okay.
So that's why everyone's saying it's not just about 0 tariffs, right? Like
100%.
that's yeah.
100%.
So
Yeah. All right. So the reality is that we have a 14% of all of our GDP, 14% of our GDP is imported. A bunch of that is things like minerals and and many of those and agricultural products, and many of those are going to continue just like normal. They might have a 10% tariff, but as MIT found out, uh, out of the 10% tariffs in the past, 80% of that gets absorbed either by the country or the producer. Only 20% of it flows through to the retail. And that's what my experience has been as an importer is, if I've got a 10% increase, I'm yelling and screaming at the producer to get the price
yeah,
down. And he's yelling and screaming at the country along with everybody else, trying to get the price, keep his prices in line, because otherwise he's going to lose the business. It's going to go away either by the consumer deciding to buy something else or by the buyer of the chain deciding not to buy it anymore. Somewhere along the line, it's going to go away if you don't find a way to keep that price in line. And who was it that said just a little while ago? It might have been Jeff Lutz. I think it was Jeff Lutz. He said, "Yeah, and all of you electronics guys out there that are worried about this, you should be in a room right now thinking about how to get another 5% out of that product." you know, so there's always that innovation phase also of trying to figure out what to do. And I've been
yeah.
through that. I've been in that conversation so many times. But I agree with everybody that this has been done very fast. Larry Goldberg says ham-fistedly, um, you know, And so it'd be great if it was slowed down a little bit. We'll see what
I don't
happens.
even think it's the speed. I really don't think it's the speed.
Okay.
I think, look, Trump failed last time to, I mean, he even said it himself, that he failed to get, the tariff deal with China that he wanted,
Mhm.
right? I forget where I saw that, but he was just recently talking about it. Um, Essentially, what he really wanted was them to open up their markets to the U.S.
Right.
Um, and the thing is with China, I don't think you're going to. I just don't think this is an approach that works that well with them.
Yeah, maybe true.
It's one of those things where it's like for us here in the States, we don't negotiate with tariffs.
Right.
It's the way it is. We don't negotiate with tariffs. Period. End of story. That's like core to us.
Right.
Um, I feel like China doesn't respond to threats like this,
Mm-hmm.
and that's where I really thought that Trump would have been, and maybe he is. Like I don't know. For like I also have this theory that this is all one big shell game that's happening intentionally, but I would have thought that he would have leveraged Elon and Tim Cook to help negotiate with
Right.
China
Right.
because they clearly have good relationships there.
Right. And there's others.
They've done
There's not just those two. There's a few more that have
no true, but nobody's been able to do what Elon's
right.
done there, and nobody's been able to do what Tim Cook has
Right.
done there.
Right.
Like it's so you've got them there to help you, find success.
Mm-hmm.
But I don't think this is the way. Now, I do have a theory, or and this is an optimistic theory, so you might like it.
Hey.
That this may be the whole strategy. Where Trump's like, "Hey, you guys, Navarro, I want you to say nope, it's not negotiable. These are the tariffs. They're it. That's what it's going to be. You, Bessent, Lutnick, you guys talk about, yeah, we're always looking for a deal. We want deals. I want chaos. Elon, I want you to start yelling at us about the tariffs because that will keep China from trying to put pressure on me through you and Tesla. Because if you're yelling at me, obviously, I'm not going to press. Like I kind of feel like I hope that there's like this big kind of game going on right now, and the whole idea is like we need to look crazy.
Right.
They need to think that we don't care about the stock market. I don't care what happens to the stock market.
Yeah.
And like that, I honestly that part I really do think is part of the plan is like they have to believe that I don't care about the stock market, that it can go down. I don't care. It'll happen.
Yeah.
Otherwise,
because who's getting hurt in the stock market right now?
everyone.
Only the players. Okay. You're not hurt if you don't sell. So the only people that are getting hurt right now are the people that buy and sell. Nobody that if you don't sell,
That's not true.
Not hurt.
That's not true.
How do you get hurt if you don't sell?
Because if you are, I'll just use the easy example. If you're retired, and you normally pull out $10,000 a month because that's your withdrawal rate, and all of a sudden your portfolio just went down 25, 30%. Well, now you can't take out the amount you had, or if you do, then it's a bigger portion of your portfolio, which screws your whole I mean, there's people who would definitely get hurt.
Okay, so that would be a fairly minor situation. People that have that kind of money in their portfolio that it's making that much of a difference on a monthly basis, also have high Social Security checks coming in. So you're really talking about, if you're taking 5,000 a month out, which would be a lot, and all of a sudden
I was using easy numbers, Randy. Like don't get hung up on the number I used.
I'm just saying it's not the real people that are getting hurt are traders. And that's why Trump may not care. Is it's like, you guys will make it back up on the next trade. It's like no big deal.
No, I don't think that's again, sorry. Let me disagree with you for once here. I don't think it's just trader. I think there's a lot of people who I said are retired. I don't think that's just a small portion. I think there's a lot of people who don't have a lot in their portfolios, and this drop makes a huge difference for them. In fact, the smaller your portfolio is in retirement, maybe you get Social Security, but you're retired based on the aggregate of everything.
All right.
And
so if you have $1,000 month that you're coming in to supplement your Social Security, and it goes down 20%, so it goes down $200 for a couple of months. Or maybe it goes down $200.
That's a big hit.
It's a
That's a
hit.
big hit.
I just got my what do you call it? Uh, 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 my condo, my homeowners association just went up $50 a month. That's part of life. That's just the way it
No,
is.
I get that. I get that. But I'm saying that, yeah, for
Somebody,
you, Randy,
my,
$50 isn't a lot. For other people, $50 is their grocery bill for the week. That's
if you don't buy any groceries, do you? Anyway,
I do. I know a lot of people who
$50. That's that's
you,
just
my
the egg.
friend, don't get
That's
out of
just the eggs.
California enough, apparently.
That's just the egg. Anyway, okay. So,
So, well, no, we're not done. We're not done
all right, go
because
ahead.
you try to make it seem like that those are the only people getting hurt. So those are the people who I think are most vulnerable.
Go.
But then there's also the people who have small businesses
Uh-huh.
and have their payrolls or need to take a loan out. 10 years not looking great anymore. In fact, it's doing the exact opposite. The 10-year shot up.
Right.
That's not good.
Well, it's good. It's good if you want to now buy some so that you get that high because you missed last time and you didn't buy it at that great interest rate.
But this. That's not how small businesses work. You're not sitting there constantly looking at the rates and making
Okay,
decisions.
it was 4.25 right now. It was 4.25 last Monday. I mean, it's not really this is I'm just saying this is a trading range right now. And so for the most part, you got people that are playing the market who are used to, I mean, this is not the first 20% haircut this market has seen. It just took one 2 years ago.
No, actually, Randy, again,
Two
you,
years
my
ago,
friend, are
2022, 3 years ago.
but but what you're missing is the velocity of the move.
Oh yeah, no,
All
it's
right.
yes.
Okay, so that velocity is not just, well, we've had this before. No, we haven't. In fact, today was the biggest swing in history that we've ever had from up to down.
Or, oh, from up to down. Interesting.
Yeah, the
Oh no,
biggest
no,
ever in
it's been
history.
really interesting to watch the crazy swing.
Yeah,
Yesterday morning was nutty.
but I can put a rock inside of a bowl of water. I can just set it in there slowly, make sure nothing happens, easy, all calm.
Yeah.
Or I could take that rock and I could chuck it at it. And you could tell me, oh, we've had rocks thrown at that bowl of water before. There are ripple effects. There are consequences that happen to this. And that's what you're seeing. In fact, one of the consequences is that this may be the start if this continues. Now, I'm not trying to be a doomsdayer here, and I'm not saying that's what's going to happen. But my point is, we have gotten to a point where I think we're at a tipping point. And that tipping point means that if the White House isn't careful, this could be severe contagion that happens in a way that we've never seen before.
Okay, let's
Yes,
go.
we're
Okay.
good.
Can we then go back to my point a couple of minutes ago? Would you think that because of the way the market reacted today, that the worst case scenario that would be built in right now would be China and the US don't get together for a month or for 2 months or whatever. It stays up in the air now for a while.
No,
What's the worst
I
case?
think I think the worst case scenario is what might be happening right now on the back end, where China, it appears like as of like an hour ago, it looks like China might be selling off a lot of our debt.
They are.
And
And they have been.
no. No. I'm talking about like there's lots of there's a lot of happening right now that it's weird what's being sold, but it looks like it's a direct effort right now as a countermeasure. And then it also looks like that they'll probably devalue their currency as well, even more to historic levels. So like there's a lot more to happen. It's not just not negotiating. It's the pain that China could inflict on us. Now we obviously have tools in our belt as well. Don't get me wrong,
Yeah.
but my point is, to what end? Because to me, there is so much that I wanted Trump to go into office for that I do not want this to be the sword that we die on and then we lose the midterms. And then it's like, well, all this over just this fight over tariffs, where it's like, I hear you, I get it, was not the biggest issue that we could be dealing with. There's so many other things we could be dealing with.
Right. So I think the biggest question in my mind comes down to not necessarily even who blinks first with regard to Trump versus Xi, but rather who's willing to pick up the phone. Now, it sounds like Trump is saying to Xi, you have to be the one to pick up the phone. Obviously, there's the possibility that Trump would, and I've said this a couple times on air today, possibility that Trump would just say, you know what, whatever, I'll pick up the phone. I'll call him. I mean, that's kind of the way Trump is, I think. I don't think his ego is going to get in the way of that. He might think it's not great negotiating to be the one to pick up the phone. And then I think to your point, which I hadn't really thought of, it could be a third party intermediary that really gets them together. It could be a Trump. It could be a Musk or a Tim Cook who talks to both of them and says, look, this is nonsense. You know.
Well, the problem is you're not going to be able to have someone like Navarro do it.
Right. No. I'm thinking it'd be a third party like Vietnam, like their leadership, or somebody that knows Xi well, that has a good relationship with Xi, and also with the president.
Yeah, maybe. I don't know, but I know that right now, like I really didn't know anything about Navarro or didn't know much, but just hearing that one interview from him, he is definitely the dumbest guy in the administration. Like, honestly, I don't know how, like, I don't know if Trump even saw that, but like that interview, the amount of wrong things that were said in a row, and it's not even like a political thing. It's just the amount of incorrect things you said.
Yeah, it's wrong. Yeah.
You should be fired immediately. Like, you just embarrassed the whole White House. That interview lost so much credibility across so many people that voted for Trump.
Right. Yeah, I thought I looked him up a while ago. Wasn't because I've heard of him and seen him from time to time, but wasn't he some kind of an automotive guy? I mean, isn't he from that industry?
I know very little of him.
Okay.
I know.
I think he's been in the automotive industry, so he might have been puffing that, the Ford guy because that's who he was talking to at the time. But anyway, all right. So you think that there's still a downside risk that
it's happening right now. It's
No,
before our eyes.
Okay, no, but I'm trying to look at. Okay. So I said this. You can argue with this as well. You may not feel this. I feel that the stock market is news driven since last Wednesday. It's all news. Whatever you pointed out, that little rumor, and boom, this happens, boom. So it's nothing. I mean, yes, the technicals I still think get in the way of it going below a certain level, but the fundamentals are completely off the table. It's all about the news.
Yeah, there's not a single stock, there's not a single company, there's not a single index, nothing. It is all about tariffs. That is it.
Right. And so to the point I was trying to make is that if it's all about the news, then the fear that's obviously taking place right now, the uncertainty which is around tariffs, there has to be a worst case scenario in order for you to be able to, if you take the time and you're a big investment company or something, you're creating that spreadsheet that says this is what happens to the overall world economy, this is what happens to the U.S. economy, this is what happens to this company if this continues to go forward. And some companies are impacted this much, some companies are impacted that much. So you'd have to have like a worst case scenario, which to me, the worst case scenario would be the fight continues and the 110% tariff stays on and no ships leave port, for in either direction from China to US or US to China for a week or for 2 weeks or for 3 weeks. And there's standoff. It would seem like that would be the worst case. What would be worse?
I mean, that's the easy worst case. That's the surface level, Randy. Go back to what I was talking about, the currency. They start devaluing their currency. They sell off our treasuries. All of a sudden, our dollar goes way high. Nobody wants to buy our notes. We start getting contagion in the markets. People start selling off. All of a sudden, the worst thing that happens, we get deflation. The Fed can't cut rates fast enough. And they can't even cut rates, period. If anything, they have to raise rates because no one's even buying our treasuries. Like, No, it can get way worse quickly like
So,
that.
so selling, yeah, they have a fairly substantial number of treasuries. They did sell off a bunch last week. My guess is they're continuing to sell because how else can you explain the bond popping back from 3.9 to 4.25 in this particular market? So yeah, I agree that they're definitely selling now. Um, yeah, so that would be a method that they could use to try to bring us to our knees, so to speak. So what else?
Who knew what else? Everything
Well,
I
the
just explained there,
evaluating.
that all has the contagion effect.
Okay,
Because
okay.
if they do that with our treasuries and they start devaluing their yuan, their currency, then that makes us have a stronger dollar. And all of a sudden that impacts our treasuries. All of a sudden, who wants to buy our treasuries? All of a sudden, we have a debt issue where we can't fund our own government,
Under
even though
government.
we buy most of our treasuries. So the Fed has to raise rates. Why? To make it more enticing for people to come in. I mean, and then now people can't buy homes, they can't buy cars. People start selling out the stock market because everything's crashing and they want to save something.
Mhm, mhm, mhm.
I
I wonder,
mean, that
it'd be interesting to find out if they really sold off a bunch of treasuries, how much impact that might have. Because obviously there's a lot of money on the sidelines. I think it's 7.2 trillion sitting on the sidelines. And so as those treasuries go up, there's going to be a lot of people going, I'm going to grab some of that. So it seemed like maybe they really couldn't push it very far before they would be overwhelmed by the retail or even the investment class.
yeah, but then they could just devalue their own currency and they can make any of our tariffs irrelevant.
So yes, well, of course, that's what they do anyway. So, yeah, yeah, that's obvious that they can do. And in fact, I would expect them to do that no matter what. They've even talked about devaluing the currency. So yeah, okay, all right. So those would be some of your worst scenarios. But do you believe those worst case scenarios are also in the minds of the investing class right now as they make a decision whether to sell off further from here, whether to liquidate equities further?
I don't think most of the investor class understand what I was just saying.
Okay.
So no, I would say no, and that's not to belittle them. I think
Yeah, yeah.
most of the investor class are people who have their 401ks or their IRAs, and like I think that's the majority of the investor class. But I think this whole situation is even worse for the investor class because again, I hear what you're saying. If you don't sell, you're fine, right? But that's not, like, I just hate to say, that's not reality. People will sell for all kinds of reasons, either to just, hey, we're coming up on retirement age. Like, I'm not going to sit here and go through this. I'll go into cash and
Mhm.
I'll wait till things stabilize and then maybe I'll come back in the market.
Right.
You get enough people thinking like that. Okay, that's a big bucket of people. Then you get another bucket of people who are just going to try to trade this and be like, oh, well, I'll sell this now. I'll buy Tesla at 150 and I'll
Right,
double my shares.
right,
You'll
right,
have another bucket, people doing that for all these different
right.
companies. You'll have real traders doing their things. You'll have banks trying to shore up their stuff. People get laid off, so they're going to start selling their RSU. Like, so what I'm saying is, like, this starts happening. All of a sudden, you got way more sellers than buyers.
Mhm, mhm.
And once you start to see that happen, and we start to fall 3 days in a row around 5%, and we don't see any bottom in this, and we don't see how any of this comes to clarity, it's just a contagion. FOMO happens on the way up.
Mhm.
It's even more aggressive on the way down. And
So,
so,
so
so,
let's,
so
so we could go, so in that scenario, you'd be looking at, we could look at some prior situations where you had this kind of a disruption. You might be looking at 50% down on the S&P, something like that. So another 25% down.
I mean, Larry Fink thinks easily another 20% down. Apparently,
Okay.
um, I don't know. It's I don't think we can compare it to another situation. Is the thing, because we're talking about the reason is I feel like other situations kind of happened more organically. It's kind of like COVID. COVID was man-made as
Mhm,
far as shutting the country down. This is man-made.
mhm,
So it's hard to, it's not like, hey, we just have a lot of bad mortgages. Let's quantify like what the big effect will be. Like, when will it stop? What do we need for a bailout? Which even then, like, you wouldn't be able to figure out on your own. Um, because like, how do you know? Like, everything's rated A, but it's crap. Like, how do you know? Like, there's no way to know, right? So even then, you didn't know. But this is man-made, and this is just, you don't know what's negotiation, you don't know what's strategy, and you don't know what's ego.
Right.
And so we have no idea. For all we know, this is a very benevolent, honest to good intentions. It's part of the strategy. I wish I could tell you guys all, don't worry about it. It's not a big deal. It's just my tactic with
Right.
China. Like, don't worry about it. Like, let's all get in the huddle. Let's all play along and just keep the markets up. Don't worry about it. There's like, be like, you know, if we have to off ramp, we will. But like, this is the game plan. But you can't say that.
Yeah. Yeah.
You know, so
Yeah.
or it could also be just, I've said I want to do this. I think I'm right about this. To hell with the markets.
Yeah. Yeah.
We're gonna go all out or not. I got, you know, he might not be thinking he's got 4 years. He might be thinking, I got 2 years to do everything I want to do.
Oh, yeah.
And
Oh, yeah.
I'm doing it. I don't care about
Or
midterm.
less than that. As some people said, he's really got until like February, because, you know, by that time you'll be lining up the folks for the primaries. Okay. Yeah. No, there's no question in my mind that he believes he has to do everything that he's going to do fast and furious. And that I do believe that, you know, because I am the optimist, I do believe that he has a very clear game plan, that the game plan makes sense. And that he has, except possibly for Navarro, he has selected a cabinet that just blows my mind in terms of their sophistication, their capabilities. Besson right at the top. I mean, this guy is so brilliant, and makes me feel good that he's in the room. Makes me feel good that Elon Musk is in the room, and that they're letting him speak his mind. They're letting him challenge
Well,
the situation. Yeah.
you know, I think that's the question that I want answered now. Like, how is Elon in the room still?
Yeah. Said he was arguing with the president yesterday. I mean, mano a mano.
Yeah, but that's what I'm saying. Like, is he still in the room? I don't know.
Yeah. 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 I don't know. I mean, after that argument. Well, I don't
Yeah,
either.
exactly.
Obviously, nobody knows. But generally speaking, I don't know. It's very, very hard to know. So if we go from that, so the supposition would be, or the two or three possibilities are, we could have another week of great uncertainty, which may or may not, we may see more of this as the uncertainty stays. We could have another news cycle, or two or three, which could cause this or this. We could have some significant or serious news cycle, like maybe there's a news cycle that says that China sells, you know, 8% or 10% of their bonds in a single day, you know, in order to try to disrupt, and people get, you know, nervous about that. How do you, what is your best analysis of what's going to happen in the next week, and how are you playing it? What,
I'm playing it very conservatively. I don't know what's going to happen.
okay. So
Um,
you're pulling.
well, I'm not doing anything crazy. It's, you know, I'm trying to stay neutral
Yeah.
on everything across the board. Uh, I'm not buying anything. Not taking any risk right now.
Yeah.
I don't know. I mean, like, I won't lie. Like, it's so tempting to just kind of take a little risk in the sense of, and this is risky, but to kind of do what I was saying before, sell all Tesla shares,
And
pick
try to
some
buy
back up
back.
at 200. Yeah. Like,
And the risk,
like,
and the risk is they go back to 250 tomorrow. Yeah.
yeah, but even then, or you can live with that, or you could, easy answer that. Sell a bunch of Tesla shares, buy some 45-day short or sell some 45-day puts,
Mhm, mhm.
and you can just roll
That
them
gets
up,
stuff
roll
on
them up,
this.
roll them up. Yeah, and that you got your cash, you de-risk. I mean, there's lots of ways to play it,
Yeah,
or start selling a lot of covered calls right now.
right.
Well, actually, that is what I've been doing. So I will say that I've sold covered calls across my entire portfolio.
Interesting.
Um,
Interesting. Yeah.
Started off at 300, rolled down 290, down 270. I mean, like it's printing money right now,
Yeah.
but
Yeah.
I'm not just going to sit here and let my Tesla shares lose value and not make money on it. Like, I'm not here for that. So,
Well, you and Brad, you're both doing using the covered calls to make that toe.
I mean, I I have a little bit different approach than
Right.
Bradford does. I think he does weeklies. I'll do like 2 weeks to a month.
Uh-huh.
Um, but we kind of have the same philosophy. We both like to avoid binary events. We like to avoid earnings, anything like that. But I'll tell you, we'll see what the stock's trading at going into earnings, because I may choose to have covered calls on for the first time going into earnings.
Interesting. Interesting. Okay, so let's switch subjects. We've used up a lot of time here, but a good conversation. So I want to switch subjects though, because only just a few people are talking about this. I mean, you went down your list of what China could do, but one of the things that people are saying is, well, they could they could tweak Elon. They could nationalize his factories.
Mm, no, I don't think they'll do that.
You don't think that's it? You think it's a very, very low likelihood?
Well, yeah, I think it's very low likelihood because look, China has their own problems. All right, they have housing market issue that they're still dealing with. They they need to employ people. They need to create jobs for people. They have a
Very high unemployment rate,
yeah.
especially.
What I was going to say is they have they're going through, in the big scheme of things, big population decline. In the short term, just in general, population decline. Um, they 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 do not have a big consumer economy like we do.
Yep.
So they build and sell, we consume,
Mhm.
which, in my opinion, consumers really dictate the market, not the builders.
Mhm. Mhm.
But everybody gets hurt in something like this.
Right.
And here's the real question. Yes, I think that's true on paper, that the consumers at the end of the day dictate what's going to happen.
Right.
I can choose to buy your thing, I could choose not. You're building it. That's your business. So if people aren't buying it, you got a problem, right? So that's true. So on paper, that works. Where that doesn't work is, here's the reality. China can take more pain than the United States can. We are a softer country. We are a softer populace. China is more ruthless. They are led by their government and they look forward. We sit here and we cry and quibble over things that happened in the past, and oh, you hurt my feelings, or oh, all this crap. Like, I'm sorry, we're a soft nation. We will complain, we will protest, we will riot, we complain about all these things. We don't think about the future, we don't think about innovation. We don't. Like, a small part of our country does, but the majority doesn't. China, they're printing more engineers than we have people here. like, so so on paper, consumer nations really do have the final say. Customers always right, kind of thing. But there's something to be said for which country can take more pain.
Right.
And I think the Chinese can take more pain than we can. So that's where it's kind of like, how do you parse it out, Randy?
Right. 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 Yeah. On the one hand, yes, I think you're maybe right that China can take more pain. On the other hand, I'm not 100% sure that at some point the people, they don't have a revolt on their hands, and this has been predicted for a very long time, and there could be a point at which the populace says, "Hey, we're done being under the thumb of the Chinese Communist Party, and we don't like it anymore."
That's possible. That is possible. But
And I think
that's that.
and I think the CPC is worried about that. I think they do concern themselves with that.
Yeah, maybe. But I don't know. I think I think we have a warped perception of China here. China. I think we have this perception that it's North Korea in a sense, or that it's this like if you were in China. I don't know if you've ever been to China, but
Only to
if
Hong
you were in
Kong.
okay, if you're in China, you wouldn't know that you're in a communist country or you wouldn't know it. So it's not like they have a lot of the good things that we have in the West here.
Sure, sure, sure. Lots,
So
lots of crazy rich Asians. Lots of them.
yes, yes. So I think they have a lot of the comforts
Mhm.
that we have here. Um, yeah, I don't know. I don't know. It's complicated, but like we've just talked about just surface level, a few things that you and I can just think off the top of our heads.
Right,
So imagine the myriad of points of views or ripple effects that we haven't even touched on that could come out of this.
right,
I imagine China has 15 different ways they can come at us. I imagine we have same towards them. Um, I imagine they're talking with people as well. I mean, and at the same time, who knows? Maybe no one really wants this. Maybe they don't want this either. Maybe
yeah,
they're like, guys, this is a freaking headache.
right,
Like,
right.
like
Yeah,
let's
I would
just
think so. I would think it would be just a headache because I mean, what is their end game really? I mean, certainly they don't want us to hollow out their manufacturing base, but I don't think that's really even what the United States intends. I've said this over and over again on the show. The United States is not trying to hollow out anybody else's manufacturing base. They're just saying, "Hey, give us 10% back, and we'll all grow together." We will make some things that we can do well and that we need to make in the United States because they're strategic. And that doesn't mean we want all of your, that we're going to take away all the business we're doing with you. We just want some of it back.
yeah.
Yeah.
And just to touch one last thing on because I kind of like went on a rant there, but the reason I don't think they would nationalize anything is because they already have an issue with having an attractiveness for foreign investment, and they need that. They want that foreign investment. So I think you really saw it kind of during COVID, but really post COVID, where a lot of companies were like, okay, we need a diversify our supply chain. You saw Apple do it with India, going into India. Like that wasn't a coincidence. That was because they got shut down,
Right.
right?
Right.
So I don't think that they're going to nationalize anything because they've gotten to a point now where their economy has gotten too reliant, and it's not a bad thing, but has become reliant on globalism,
Right.
on trade,
Right. Absolutely.
right?
100%.
So yeah, so you need the rest. I mean, and honestly, that's the best thing about globalism and free trade is it's honestly the biggest motivator for peace.
Yes.
Because if we're all reliant on each other, well, then you're just the bully who everybody's gonna be upset. Like, hey, why are you ruining a good thing? Like,
Right.
so yes, I just don't see them nationalizing anything.
All right. So today, Adam Jonas, just before we came on, reiterated his 410.
410. Yeah.
But Dan Ives dropped his PT from 535 to 315. And I bet you're not a big Dan Ives fan. I think I remember that about you. But
I'm
so
the only one that didn't change their mind after he said, "Oh well, now I'm with Elon." Yeah, yeah. Everybody got on the Dan Ives bandwagon again. But I don't have a short memory.
Yeah.
Yeah, he's I his he's just wrong. I don't know how else to say it. Um, he and the problem with a lot of, I mean, I don't know what specifically you might be thinking of, but I think the problem with a lot of things that he's saying is look at the damn market, man. Everything's down. This isn't a Tesla problem. And if you're going to sit there and talk about the reputation, the brand damage, again, you're doing by saying that essentially Elon shut up and stop doing all this. All you're saying is that, hey, all this violence and this attack and drawing swastikas on people's vehicles and vandalism is okay. That if you do that enough, then okay, it works.
It works.
And
Yeah.
what happens next time?
Yeah.
You know?
Well, I think the thing that concerned me the most, I've had the argument about the brand damage thing with him, not directly, but indirectly with him and with others, because I think there's brand damage, but I think there's brand appreciation coming from the conservative side of the aisle. My biggest concern was the inconsistency in what he's been saying, because for the last year and a half, he said the company's no longer in the metal bending business. The valuation is all about Robotaxi and Optimus. And so how's that changed? And the brand damage isn't going to change it either. So it's like, it should
Yeah.
be the same valuation.
He doesn't know what he's talking about. He doesn't understand the company. He says the same three lines all the time, but he doesn't understand the company. He doesn't understand FSD. He doesn't understand AI. I don't know. My wife could put a model for Tesla better than what he can. It's like she understands it better. Like so, and he's supposed to be this guy that everybody reveres as some expert analyst who's crying every 2 seconds. Like, damn, dude, how long you been invested in Tesla? Get used to this.
Actually, I don't think he has an investment in Tesla. I think he's never had any skin in that game. I'm pretty sure.
Yeah.
Yeah.
Well, you know how I could have guessed that because the only ones that do have an actual investment in Tesla, they're not out there crying.
Yeah. Right.
You know, and if they are, guess what? Sell.
Yeah. No kidding.
Move on.
Yeah.
Like if you right now, if you can sit there and just look at the market, say everything's happening, and you think, hey, this is an Elon problem, this is a Tesla problem. Hey, go invest in another company and then go have at it at that CEO and be like, man, it's
Yeah.
weird. This keeps going down just like Tesla was. I don't know.
Okay, so let's look at the market really quick before we go past the hour like we did last week. We got like an hour and 5 minutes, but people watched you anyway.
They did?
It was
Me?
a big hit, even though we went over an hour. So let's start with Tesla, down another 355 in the after hours, but 218, not the end of the world. The Optimist said. So you've got better, oh no, I guess I have these. Let's go back. The bonds. Yeah.
Bonds first.
Yeah. So 4.299 popping back up. It was coming back down again. It was as low as I think just in the last couple of hours, as low as like 419 or something, but now back up to 4.301.
And just for context, everybody, huge move. That's a huge move.
Huge move for
bond. We went from under 4 to 4.3.
Yes.
Okay.
Yes.
That's a huge move. And that is the main reason that there's a lot of speculation that this is China.
Oh yeah. Well, not even speculation. I don't know how we know these things. I don't know how to look it up, but somebody actually had some figures in terms of last week what they sold. So they sold.
Yeah, that's last week.
Right.
That's last week.
Right. Yes. Of course.
This happened in a
Wow.
day.
Yes. I know. I understand, and I can't. And there's no other way to explain it. We have oil is down another $2. This is your specialization. So we're 57.53. This is exactly where I wanted it to be. It's perfect.
Yeah, so this is weird. Okay, this one's weird. Because you would have thought that oil would have gone up with everything going on. because it just makes oil more expensive. But instead, it keeps going down. All right. Now, you can rationalize why it went down. Like, we can all do that. I can, like, find a way. But what's even more interesting is the impact that this is going to have on inflation.
Yeah.
Everything's just having an opposite effect that you would have thought. Okay, let's pretend China's not the reason that the 10-year just went up.
Right.
Everything that's happening right now, people are saying, "Oh, Trump's trying to kill the market, whatever, to get yields down because we want to refinance this debt." Valid theory.
Yeah.
I mean, I think it makes a lot of sense. But the opposite's happening now.
Right.
Okay, so if this isn't China, the opposite's happening.
Right.
So yields are going up, and the market's tanking,
and the oil is going down, which is
oil is going down, which everyone thought it would have gone up. So it's almost like, well, what should we believe?
Yeah.
Right now,
exactly.
I don't know what to believe.
Yeah. So the way that I would, if I didn't have you on right now, I would explain it this way. I would say most folks would say oil is going down because they believe the demand will be less worldwide if there's a worldwide recession. I have said earlier on my show this morning, I think it's more because Trump is saying that we're going to add 3 million barrels a day to U.S. supply, and Saudi Arabia just said they're going to add also. So if you got both of us adding, then the price of oil's got to come down. And that's what I've been predicting for weeks now. Even last week when you and I were together, I said, yeah, I think we're going into the 50s. And you said you thought it probably would go into the 50s. So this is good, but I think it may be because of concern over recession as opposed to concern over overproducing.
But so I agree with you. But if that's the case, that's indicative that there's going to be a recession. This isn't just the market's just selling off because people are being irrational or traders or whatever. I mean, these are traders. But my point is, this is a stronger signal towards we're going to have a recession.
It's a stronger signal, but what I've been saying also is it's been 5 days. Nothing that happens in 5 days by itself can create a recession. Now, I've been calling for a recession for a while. I'm saying that we have a good chance of a recession already because of the reduction in government employees, the amount of money we're taking out of government spending. All of that is likely to cause a recession all by itself. So this is another thing. This would add another piece to the puzzle that could cause us to go negative for a while. But even the people that are calling for a recession are calling it a 40-60 or 60-40 likelihood, and also a very, very minor recession. Nobody's calling for a deep recession.
Yeah. Well, just because it hasn't happened doesn't mean it can't. Right? Oh, no, 5 days is enough. All right. I think COVID only took 5 days to put us in a recession. All right. So it actually could happen. And we've broken a lot of records in the last 2 weeks.
Boy, have we.
Yeah. So, and honestly, I'm still not in the camp that we have a recession. I still don't think we do. I'm more optimistic. I genuinely think that, and maybe I'm just hopeful that all this gets resolved. We get some good news and things rebound sharply. I mean, we already see that the market wants to go up. The market's ready to breathe a sigh of relief. We saw that.
Yep.
So, yeah, I don't know. But I think this low oil price is really interesting. And the reason it's not good is what I would say. We are at the point where, no, Trump, you're not going to get 3 million barrels a day. If we go any lower, it's not happening.
Right.
Because there's a break even
100%
to bring. Yeah. And so, and in the past, when we drill, baby, drill, which is a very common phrase, or drill, baby, drill, or turn them right, is a very common phrase used in the industry. You have that kind of mentality, energy at $100 barrel oil, 110,
Yeah, yeah.
at 57, 55.
It's fine.
You're saying hiring freeze. You're saying we're not going to renew this contract. We're not going to renew that contract. We're going to hold off on this project. That's what you're saying at these prices.
Right, right. And of course, Trump made another interesting statement today, where or yesterday he said, clean coal, let's
Cool.
go. Yeah, yeah. So that would
Yeah, that
be
was today.
another competitor to the coal folks. All right. So natural gas actually up. There you go. That's interesting. Gold flat, sitting right around 3,029.86, but quite a bit down from its high. Silver right around $30, 29.39. So those are both kind of flattish, not really making much of a move in either direction as all of this unfolds. But copper, which would be another recessionary gauge, continues down 2.08. It's now just barely over 4. And 2 weeks ago it was at 5.15.
Yeah.
So that's a pretty big move. Dollar mixed. There you go. Of course it will be mixed. Bitcoin down 23.16. Okay, that's a new low for Bitcoin. I mean, not new low,
Well,
recent low, a new recent low.
I'll tell you what, Bitcoin's held up better than pretty much anything.
Yeah, yeah,
So, I mean, well, I guess gold's held best.
yeah. They
But
definitely held the best. Definitely held the best. All right, here we go with the stock futures at this point. So we're still looking at the S&P only down 1.57. So at 49.82, it is still slightly above that 20%. So not quite to the full on 20. NASDAQ down 2.15%, sitting at 15,267. Dow Jones down 0.84 at 37,645. I had a guy on today who was on X rather that I saw today who was arguing with one of the cabinet members who said he was willing to bet that the Dow would be over 50,000 before the end of Trump's term.
oh, that was Navarro.
That was Navarro said it. But I think 50,000 by the end of Trump's term would be a no-brainer. It's already at 37.6.
Well, he actually said something like within the next 2 years.
Oh, he did. Okay, because I heard 4 years. Okay, within the whole term. All right. 2 years,
Yeah.
that'd be touch and go. Actually, it all really depends to me more on AI than anything. Larry and I talked about this last night, or yeah, last night. It's like this is all happening at such a funny time because we're just about probably to see an explosion in terms of productivity with the AI because it's time and there's starting to be things. A lot of new apps, coming online. Huge number. I saw this guy on Peter, what's his name? Uh, Diamantes. You know the guy, the futurist guy, Peter
Oh,
Diamantes.
the guy who's always wrong about everything?
No, no, the guy that does the X Prize and all that. No, he's not the guy that's wrong. He's a multi-billionaire. He's anyway, he had this other guy on, and the guy was saying that he normally has 10 AI deals going at any given time. And he says right now he has 30. He's
Mm,
what do you call it? A venture capitalist, angel. He says 30. He says, I don't want 30. He says, but there's
mm.
so many good apps in the pipeline right now that I've got 30 deals going. So anyway, so it's kind of a weird time where we're just about probably going to get this huge bump in productivity from AI and from robotics, and which will solve everything in a way.
Well, we'll see. I'm actually in the camp. Like this is. I think I've said this several times, but where I disagree with Elon. I don't think that humanoids or AI create a world of abundance where people don't work or anything. Like I just think it creates infinitely more jobs,
Yes,
infinitely more things that
100%,
we have to
100%,
do.
100%.
Yeah.
Agree with that, but I do think it creates abundance.
I it, maybe in the sense like if you were 100 years ago been like, everyone's going to have a refrigerator and a microwave and
Right.
ice and AC, and you'd be like, oh, everybody has abundance. And it's like, okay, maybe in that sense, but it'll be just different now.
I think it'll be different. The number one thing will be everybody will be vacationing and you won't be able to get into any vacation locations. All right. So we got to wrap this. We got to wrap this. It's been an hour and 20 minutes. No, anyway, we've gone over again. It's you and I. It has to be our fault. It's the only way we can explain it.
We're talkers.
So I hope you've enjoyed this mystery. And we'll see what the mystery unfolds tomorrow morning. It's got to be
midnight.
Well, no, midnight. Yeah, but tomorrow morning will be when the mystery really begins to find out on the stock market how the mystery really unfolds. All right. Thank you so much for coming on, as always. And to all of you, it's been great talking to you.